السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.
The most powerful ideas in all technical analysis, which is the idea of support and resistance. This is perhaps the most reliable of all chart techniques, and it's a tool that has many different aspects and representations. So without further ado, let's begin exploring the secrets of support and resistance lines. Secret number 1. Support and resistance as active barriers for price. One of the reasons that support and resistance lines became so popular is that they solve one of the problems of technical indicators, which is the presence of lag. Instead of following the lagging lines of a technical indicator, traders can observe active barriers on price that are completely free of lag. That of course has the advantage of providing more accurate entry and exit signals. When price is above the line, we call it support. When price is below the line, we call it resistance. The other reason why support and resistance lines work is that many traders pay attention to them. In fact, almost all traders pay attention to some sort of support and resistance line in their analysis. So whenever price encounters these levels, the market tends to react in a relatively predictable way. Secret number 2. The switching quality. One of the properties of support and resistance lines is their switching quality, meaning that support lines can become resistance and resistance lines can become support. Price will usually test the line a few times before zooming into the other side and switch the quality of the line. Knowing that can give you an edge in certain situations. In this chart, we can see a good example of a horizontal resistance line turning into support line. Notice how after the price zoomed the line to the upside, it tested the support 3 times, giving a few chances to get in a long trade. Notice also how accurate those tests of the support line are. If you compare this with the signal of any technical indicator, you immediately observe how the absence of lag makes all the difference. Secret number 3. The number of tests on a line. The more times price touches a support or resistance line without violating it, the more powerful the line tends to be. For example, a line that has been tested 10 times is much stronger and represents a much more reliable barrier than a line that has been tested 2 times. That happens because the more times price touches or tests a support and resistance line, the more obvious the line becomes. The more traders start to treat it as a meaningful barrier for price. In this chart, you can see an example of support line that has been tested a total of 8 times, as it is highlighted by the green arrows. As time passes by and price keeps testing the line, it becomes more and more obvious that this is a strong support line. The result is that many traders start to pay attention to this line and react to it. Notice that it was possible to draw this support line in the first 2 green arrows. If you were able to make the case for a long trade in the following green arrows, the support line would serve as an extra confirmation. Secret number 4. Support and resistance lines can be horizontal or sloped. So far, we have seen examples of horizontal support and resistance lines, but such lines don't necessarily have to be horizontal. They can be sloped as well. In fact, this idea opens up a whole new world of possibilities in a price chart, because if we consider that support and resistance lines can be sloped, we can see many different levels that we wouldn't be able to see otherwise. In this chart, we can see an example of sloped support and resistance line. Notice how this line displays the same properties of a horizontal support and resistance line. We have price testing the line a few times as support, as it is shown by the green arrows, then price zooms down the support line, therefore switching its quality to resistance. Price then proceeds to test the line 4 more times as resistance. Observe also that without the idea of slope support and resistance line, it would be impossible to find such level in price action. A horizontal support and resistance line would completely miss this relationship that is captured by the slope line. Secret number 5. Support and resistance lines can be straight or curved. In the case of horizontal and slope support and resistance lines, we are dealing with 2 types of straight lines, but there are more possibilities than that. Beyond straight lines, we can also find curved support and resistance lines using a few exotic tools like the Fibonacci speed resistance arcs. In this chart, we can see a very interesting application of this concept. The curved lines you see in the chart are a result of the Fibonacci speed resistant arcs tool plotted on the price vector highlighted by the black line. In this case, I only considered the most powerful of the ratios, which is the 1.618 for reasons that I explained in the video about the Fibonacci trading secrets. If you haven't watched that yet, I suggest that you do if you want to learn more about Fibonacci. Notice how the curved 1.618 arc line represents a resistance for price as it is shown in the green rectangle. Price touches the Fibonacci speed resistant arc 2 times and reverses immediately after. Secret number 6. Support and resistance from indicators. As it was discussed in other videos about technical indicator secrets, we can use certain indicators as dynamic support and resistance lines. Most commonly used indicators for that are moving averages and Bollinger Bands. In this first chart, we can see a simple 20-period moving average acting as dynamic support and resistance. Notice how the moving average functions as a support line in the green arrows while price is above the MA. Then price zooms down the MA and starts to treat it as a dynamic resistance line in the red arrows. In the second chart, we can see a similar effect using the Bollinger Bands indicator. In the case of Bollinger Bands, the outer lines, which are the standard deviations, will act as support or resistance. We have to be very careful about using this sort of technique because the standard deviations can easily produce false signals in this regard. Secret number 7. Support and resistance from pitchforks. As many of you know, I'm a fan of the Andrews pitchfork because it's a tool that is grounded on the first principles of physics, unlike the other tools in technical analysis, which are usually lacking in that sense. We consider the lines of the Andrews pitchfork as a source of non-obvious support and resistance. In this chart, we can see a good example of using the center line of the pitchfork as a type of resistance. The Andrews pitchfork is grounded on the points highlighted by the black circles. That generates a specific range with a specific angle. The center line in this case will act as a sloped resistance line. We can see that when price reaches the line in the green circle, it immediately reverses, showing that this idea indeed has some power. Obviously, this type of thing is too simple to work all the time, so you have to combine things like that with other tools in order to find high-quality trade opportunities. In the second chart, we can see a downward pitchfork grounded on the black circles. Look how the upper, lower, and center lines of the pitchfork ended up working as sloped support and resistance lines. Here we are combining the idea that support and resistance lines can be sloped and the idea that they can be derived from special lines like the Andrews pitchfork. Secret number 8. Support and resistance from Fibonacci. Very much like the last example where we used the Andrews pitchfork to find sloped support and resistance lines, we can use the more common Fibonacci retracement and expansion tools to find less obvious support and resistance levels. These levels work precisely because a lot of traders look at Fibonacci levels and they tend to react when the price reaches these levels. In this chart, you'll find an example of the Fibonacci expansion tool plotted on the 2 black price vectors. Notice how the 1.618 level acts as a support and resistance level and how the line keeps switching between support and resistance. In the second chart, we can see a slightly different application of the Fibonacci retracement tool. The retracement was plotted on a black price vector. Notice how the 1.618 level acts as support in this case. Secret number 9. Momentum support and resistance. A less common use of support and resistance lines that is still valid is to plot such lines on oscillating indicators like the RSI, for example. These lines can be horizontal or they can be sloped. In this chart, we have an example of a slightly sloped support line drawn on the RSI indicator. Notice how the testing of the support line correlates with the lows in price action. In the second chart, we have another example of a resistance line turning into support in the RSI indicator. Some people might want to call this momentum support and resistance lines. Notice how the RSI indicator distorts the highs and lows of raw price action in such a way that it allows us to see non-obvious reversal points by observing when the momentum line reaches the momentum support and resistance line. It's important to realize that it's impossible to see this momentum support and resistance relationship just by looking at the raw price action. I hope you learned something new and useful with this.
السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.